Coming up today, the Dow Jones hits a fresh record on the back of more hot earnings. What's driving this stock market rally? Global inflation continues to fall, Amazon invests in nuclear energy, and why this is only just the beginning. You don't want to miss this one, guys. Let's go. Hey, what's up guys? Welcome back to the Daily Market Review on another bullish day in the stock market. Nothing seems to be able to hold this market down for too long after we had that bit of a bearish day yesterday. And this is on the back of more hot earnings as we're ramping up Q3 earnings season. United Airlines came in today. Pretty good beat. Stock up 12%. Same deal with Morgan Stanley. Smashing Wall Street expectations. Stock trading at a brand new all-time high, up over 6%. On deck tomorrow, the big one, Netflix. Earnings per share expected to come in $5.11. Another big one tomorrow will be Taiwan Semi, the largest chip manufacturer in the world, key supplier to Nvidia. We'll be watching that one closely after we had that big drop yesterday in ASML after they said their Chinese sales are going to be lower due to US chip controls on their exports. We've also got the European Central Bank meeting tomorrow, and this market is starting to heat up. We're getting quite some big moves out there, especially in some smaller biotech stocks like Wave Life Sciences, up 74% today. Another one, ProQR Therapeutics, up a whopping 122% today after yesterday's blowout stock, Bright Minds Biosciences, was up a huge 1,400% yesterday. Monster volume as well. And apart from jets today, on the back of United Airlines, the best performing sector ETF today, retail stocks, up 1.5% as we also get US retail sales coming tomorrow. Expected to print 1.6% year-over-year growth. And just looking at the chart here, we've been consolidating pretty much all year. In fact, I'll just go out to a weekly chart and just expand it here for a second. We're still well off those highs from late 2021. Did a monster base from mid-22 to late 23. Pushed up a bit, and we seem to be in a bit of a box right here. It's been going on for a while, and I've got a feeling it's going to resolve itself higher. As hard as that may be to believe, retail stocks breaking out here, as I know the consensus is that we're in a late cycle, looking at the business economic cycle. However, that's not what the price action in markets is telling me. And don't get me wrong, I know there's some mixed economic data out there. However, just keep in mind technicals lead, fundamentals follow. Just looking at the Russell 2000 on the weekly chart as well. This looks to potentially be the mother of all rounded bottoms here. Currently going on in the Russell 2000, with it too pushing up against that resistance zone up the top. And in fact, just looking at the daily candle, it just closed at the highest point all year. Small caps are breaking out. Definitely led the pack today, up 1.65%. And so typically in late cycle, that's the economy overheating, things kind of getting towards a peak, inflation climbing, interest rates climbing, growth slowing down, and you'll typically see the defensive sectors leading. And that's just not what we're seeing in the market. Growth is still outperforming defensive sectors this year, and we've got other classical cyclical sectors like industrial, one of the best performing sectors, not only of late, but this year as well. Really under discussed, the industrial sector. Not to mention financials as well, ripping up higher. And again today, regional banks just broke out to a fresh 52-week high as well. And even though we've got utilities ripping, that would traditionally say there is a defensive rotation. However, the difference this time is I believe this sector's being propelled higher from the AI boom. And stick with me today because we'll talk more about that, with uranium nuclear ripping up massively today on news of Amazon's continued investments in the sector. I'll show you all the hottest stocks in the nuclear uranium sector, including Nano Nuclear Energy, up 37% today, along with NuScale Power Corp, up 40%, and later on in this video, I'll show you all the other nuclear and uranium stocks that are exploding higher today. My regular viewers know I've been a uranium bull ever since I started this channel, and I believe this is only just the beginning. So that AI boom is why I believe utility continues to be one of the strongest sectors in the market. However, just looking at the other traditional sectors like health and staples, they're actually the lowest performing sectors. When looking at average market breadth, percentage of stocks above their 5, 20, 50, and 200-day moving averages. Like I said, it's actually financials, industrials, and tech, and even consumer discretionary. Classic cyclical sector having some of the best market breadths. Is clearly a growth cyclical led bull market that just turned 2 years old. We've got inflation falling, interest rates falling, corporate earnings at all-time highs, and of course we do have some mixed economic data out there. So I don't want to call it early cycle, as that'll definitely be too controversial. However, I'd say we're more closer to an early mid-cycle. Just looking at the price action we're getting, corporate earnings, inflation, and rates, and just looking at the earnings calendar here for yesterday. Stocks ranked by their market cap, the earnings per share we got, what the consensus was on the street, and the previous reading. The green numbers indicating EPS beat compared to what Wall Street analysts were expecting. Yesterday, bunch of green there. Oranges is the miss, slight miss on Interactive Brokers and Omnicom. However, looking at the biggest stocks, the banks are crushing it. Looking at earnings we got today, again, a lot more green there, a lot more beats than misses. And then tomorrow, like I said, the big ones, Taiwan Semi, Netflix, Blackstone, Intuitive Surgical, and a few other financials as well. In addition to retail sale, that could also get retail stocks moving moving? How much has the consumer been spending? Pretty low hurdle, 1.6% year-over-year growth. Maybe we get a beat tomorrow. Do you have Wall Street analysts jumping over each other to increase their end-of-year targets, not only for the S&P 500, but all the key stocks in it? Earnings getting upgraded, along with price targets, buy holding. I think there's a real shot we hit 6,000 on the S&P 500 before the election. This October seasonality and weakness just doesn't look to be playing out as we move into the second half of this historically weak month. I've seen a few little rotations, but that's another good sign of a bull market. And even though we've seen a rip in the dollar, stocks haven't seemed to mind that at all. Nor with the bump up in bond yields, geopolitical tensions, market seems to be on really firm footing here. And so even though the stock market by many historical measures is overvalued, that's no reason to turn bearish, one analyst is saying. According to Piper Sandler, they advise against selling stocks despite an estimated 8% overvaluation in the S&P 500. The firm sees no immediate catalyst like surging interest rates or inflation to trigger a downturn. Investors should focus on stocks with strong earnings momentum for outperformance. And so I think valuations have kept a lot of investors on the sidelines for a little while now. Market cap to GDP is a big one, at all-time records, currently at 200%, which we've never gone higher above before. However, what happens if it goes to 400%? What happens if US GDP growth accelerates next year? And how would the stock market hold up in that scenario? Is anyone expecting that? However, some are not so sure. Research from Stifel says the stock market's in a mania that will push it higher before a potential 26% drop next year. Investors could be impacted long term, as manias tend to lead poor returns in the next decade. And for sure, if the Shiller PE plays out, US stocks, as measured by the S&P 500, dominated by large cap growth stock, could underperform over the next 10. And apparently Bank of America said stock markets flashed a sell signal not seen since February 2021. And that's a drop below 4%, and cash allocation suggests aggressive stock market investment. Investors are growing more optimistic about economic growth, but fear geopolitical conflicts and inflation. And that's the bank's fund manager survey, revealed that cash allocations dropped to 3.9%. And according to them, a drop below 4%, typically a sell signal. It's a contrarian sign. So investors are getting fully invested here. However, there's still a record amount of liquidity out there, over 6 trillion in money market funds. Now a really loose Fed, government spending still off the chart. All that money has to go somewhere. But we got another article in Barron's today, again from Stifel, saying the US economy looks like it will dodge a recession, why stocks could still fall. Saying the US economy is likely to pull off a soft landing, even though those tend to be the exception rather than the norm. But they're arguing that the current rally has already accounted for that, and then some. In short, it's simply overshot. Again, pointing to valuations and that the market has already brought forward all the growth that we may indeed see next year into 2026. And here's an interesting post that showed up in my feed today. Breaking news. At the peak of the dot-com bubble, Cisco was worth 5.5% of the US GDP, and today Nvidia is worth over 11.7%, which is 200% higher. When this bubble pops, and it will lead to a collapse bigger than 2008, only a matter of time. However, I'm going to award the post of the day to one of my favorite follows over on X, from Eddie Elfenbein. We're coming up on the 37th anniversary of the 1987 crash, and there are several eerie similarities. The weather was about the same that time of year as it is now. The baseball playoffs were going on. There was trouble in the Middle East, and he's just pointing out the fact. And so even though he's been sarcastic, I think he makes a good point. People get so fixated on something that's occurred in the past, and they think just because something has happened in the past, it's going to happen exactly the same again, right here and now. Whereas in fact, there may be key differences that makes each scenario a little different from the other one. And just looking at Bank of America's Global Fund Manager Survey, had a sharp spike up in the change of fund managers, expecting a stronger global economy in the next 12 months. Big investors are turning bullish on the global economy, and again, that's showing up in price action. We've got a lot of global equity indices sitting at all-time highs. Germany's DAX, the Aussie 200, and even the FTSE 100 just sitting below all-time highs, even though their growth's been a little anemic. Canada's TSX ripping up to all-time highs. This is a global equity bull market, and we may not even be halfway through it. Have a look at this data here from Analyst Research. We're now just moving into the third year of the bull market. Looking back in history, third year tends to be a little weak. Average gain only around 2-3%. However, the good news is the market continues to hold up. And like I've been saying, if we don't have a big sell event in the next couple of months, market could be tracking on a no recession path. And if we hold up through year 3, a lot of these bull markets can continue on even for 10 years or longer. And looking back in history, secular bull markets can go on for longer than 20 years. And so remember, American stock market had a bit of a lost decade. In fact, it was more than a lost decade from the year 2000 until 2013 when it broke out to new highs again. And so some people use 2013 as potentially the start of a secular bull. However, if you look when the market bottomed in March 09, if we're in a secular bull, we're 15 years in. And you got to remember with markets, there's no hard limits on what can occur. No reason this can't go for 30 years. And we're only halfway through a secular bull market. But while we could be seeing a lot of strength now, even though most people We're expecting a big pullback dip, 20-30% crash this month because of all the stats looking back in history. Like I told you guys on Monday, I think the market's already pricing in a Trump win. In my opinion, and this is just looking at all the data and everything I see out there, I think Trump could wipe the floor clean and win in a landslide. And so does billionaire hedge fund manager Stanley Druckenmiller, who's saying the market's very convinced that the Republicans will win. He said you can see it in bank stocks, you can see it in crypto, and you can also see it in the political betting market. Almost $2 billion wagered on Polymarket, with Trump now showing the biggest lead over Kamala Harris, 58.5% chance. And so I think a big part of that is just the fact when you look at household surveys, like the New York Fed survey of consumer expectations. And what's interesting about these surveys, just like consumer confidence, is they're not being asked political questions, as a lot of people's politics don't align with the data. However, when they're asked about their own finances and expectation, when the question isn't being framed as political, you'll get a more truthful answer. And the fact is, looking at this chart here of household financial situation, people saying they're much worse off versus a year ago has done nothing but climb since the last 4 years. Just the same as consumer confidence has done nothing but dive over the last 4 years, down to lows we haven't seen since the global financial crisis. And again, this is another survey that just asks consumers for their view on their own financial situation, how they view the general economy, and their prospects for the economy over the long term. And that's what's funny, isn't it? Because even over the last 4 years, stocks have ripped up to all-time highs. So's property. The 1% have never been richer. However, consumers in general, they haven't felt this worse in decades. So it's no surprise they're going to flip their leader. This is what happens in history. It's very rare that an incumbent in a recession gets re-elected, or in this case, the incumbent administration, as they chose a new leader. But even though we're not technically in a recession, a lot of consumers feel like they're in a recession. Their prices in this time have gone up 30-40%, but their wages have stagnated. Their discretionary income has been depleted, picking up night work, second, third jobs, and so just maybe a lot of consumers want inflation, or at least the chance of inflation, to go back down to 1.5%. And in addition to small caps breaking out, along with Bitcoin trading up to fresh multi-month highs, even though the dollar's climbing, along with regional banks, we've got other ETFs that hold stocks that are set to benefit from a new administration, like the American Industrial Renaissance ETF, breaking out to all-time highs again today, along with the American Reshoring ETF and the new administration's drive to bring back manufacturing and production to America and spend American taxpayer wealth inside the country instead of offshore. Like I said, money doesn't lie, and the market is pricing this in. Also interesting to hear from Druckenmiller today. He said the Fed will be much more hawkish under Trump, something I agree with as well, and what I've been saying for a few months. Don't be surprised to see a changing tune and language from the Fed if he does win. They'll start talking about inflation more, and who knows, they may even flip and start jacking rates again next year. Got to be prepared for that one. Also interesting to hear from Stanley that he shorted bonds as soon as the Fed cut 50 basis points. And it's almost like Jay Powell rang a bell at the top of the bond market for this year. That's when he cut 50 basis points. Bonds have gone nothing but down, opposite direction to what a lot of people thought. Because he's going to be cutting rates, bonds are supposed to rally. However, what's happened since then, markets have started pricing in the potential resurgence of inflation because he's gotten so loose when everything's okay. He didn't need to get that loose. And keep indicating to the market that they want to trim rates. They want to get it down to a 2-handle because the government can't simply afford to pay back their debt. Inflation risks have been pushed down the agenda. And Stanley wasn't the only one as well. Fund managers had their biggest monthly decrease and their bond allocation. They've bailed on bonds. Don't know why you'd want to own bonds here with a 2-year at 394. Like I said, we'd really need a recession for that to move down into a 2-handle. And even then, the gains are limited. The market's already got it. Now just moving on to one of the biggest stories hitting the financial wires today. News of Amazon investing in nuclear energy. Seen a lot in the last month. Big moves from Google and Microsoft as well. Like I've been saying for the last few months, I expect more and more big tech to move into this space. We're only waiting on Meta and Apple to come out with big announcements, which I wouldn't be surprised to hear from them too over the coming weeks and months. But it's got news today. Amazon is anchoring a $500 million financing round for X Energy to develop modular nuclear reactors. The first sites in Washington and Virginia would provide carbon-free energy to meet growing demand. And so this is a game changer. The biggest, most cashed up companies in the world directly looking to partner with and invest in nuclear energies, build their data centers right next to nuclear power plants, pretty much plug them right in because they're going to be the biggest users of power in the world. They're already overtaking small countries in terms of their electricity demand. And this is good news for nuclear and uranium bulls like myself, that I've been bullish on this sector for a few years now, even before the AI boom. I have plenty of other reasons for being bullish on the sector. This is just a bonus of the AI boom now, really starting to drive it. In fact, we've got some of the most wealthiest men in the world starting to invest in it as well. Ken Griffin, owner of the world's largest market maker, Citadel. He's backing Amazon's investment into small nuclear reactors. And that's because he sees the growth ahead of him. US electric power demand for the last 20 years has only been growing about 1% per annum. However, it's forecast to triple to 3% per annum all the way out to 2050. And that's because nuclear is the clear winner when it comes to being the most efficient source of energy compared to everything else out there. Nothing comes close to it in terms of its power. In fact, if you study the Big Bang Theory, life itself came with the help of a uranium geyser. And like many industries, it's actually China that's leading the charge on the build-out, with their nuclear power capacity under construction bigger than the rest of the world combined as they continue to invest heavily in clean and renewable energy. And so it started early last year with the explosion of ChatGPT, and then we're just starting to see the domino effects of what could end up turning into a full-blown American nuclear renaissance. And that's why we got the monster move in the Global X Uranium ETF today, along with the entire sector. The largest nuclear company by market cap in the world, Cameco, ripping up today. There's a look at the largest actual producer, Kazatomprom, listed over on London out of Kazakhstan. Shaping up, Denison Mines, your larger utility stocks that are into nuclear energy, Constellation, Vistra Corp, there's the Sprott Physical Uranium Trust on Canada's TSX. They actually hold yellowcake in inventory as uranium doesn't trade on the futures exchange like most commodities. The prices are negotiated between producer and consumers, and also the more speculative end of town ripping up today. Some of these companies barely have much revenue at all, cash flow negative, huge performances today. Centrus Energy up 26%. There's Nano Nuclear, which doesn't even have any revenue, ripping up, along with others like NuScale and Oklo ripping up today. So keep in mind, these are very speculative stocks. This one has no revenue, so it's going to be huge volatility. By no means am I advising you to buy this. In my opinion, there are better ways to play it. And in fact, just before the market opened on the 16th of September, I gave out a stock pick to my members in the uranium sector. And so far, that's doing better than this ETF here, already up 34%. And so if you'd like to find out how I'm invested in this sector, along with all my other stock picks, then click the link below this video and head on over to my website and sign up to my stock pick service, and you'll get access to the private members area, and you can see all my picks and why my account is currently sitting at a brand new all-time high today. But just speaking of clean energy, moving over to Tesla, still consolidating after we got that gap down on Friday to the unveil of Robotaxi. Hasn't been immediately received too well by investors. However, good news is EV industry in America still holding up well. Americans bought a record 346,000 all-electric vehicles in the third quarter. That's up 11% year over year, and EVs still only account for 9% of all new car sales, which is another record. Tesla represents almost half the American market, selling almost 167,000 vehicles in the third quarter, up 7% year over year. And globally, Tesla sold 463,000 EVs in the third quarter, up 6% year over year, and Wall Street is projecting they'll sell 490,000 in the fourth quarter, which in my opinion is a pretty good job, considering the flood of cheap EVs coming out of China, looking to swamp global markets with them. This is one of the reasons I'm a long-term believer in Tesla. They have a strong foothold in what's set to be the biggest market in the world soon, China. Not to mention their surging battery storage business, potential and robo-taxis, Optimus Bot. I'm really excited about what the future holds for Tesla. And so I did have some buy orders down in this support box here to add to my long-term account. I just bought some more shares at market today, and we'll still happily add more if we trade down into the support box. However, we got earnings coming out this time next week. Got a feeling we could gap back up. However, if we don't, I'd welcome the opportunity to add more shares to my long-term account in the 180s, 190s if we were to gap down. And just speaking of China, we're still pulling back. Investors still looking for more stimulus, not fully convinced that Chinese authority can get underneath their economy and markets. And in fact, we're only just moving off record lows of China allocations and active funds globally, which recently just hit 5%. Big money hasn't come back to China just yet, but we are seeing some green shoots there. Just like we are in their property stocks. Really lighten up in yesterday's Asian session. Like I said, when Chinese stocks move, they can move. That's just the daily changes in some of their property stocks yesterday. We also just heard from Xi Jinping. They'll strive to excel in Q4 economic efforts and aim to meet their annual development goal. They want 5% GDP growth, currently on a high 4 handle. And the Chinese are extending the olive branch to the Americans. We also heard from Xi say he's willing to be a partner and friend with the US, and that the success of China and the US is a mutual opportunity. Both should boost, not obstruct each other's development, which I agree with as well. And there's a look at the Chinese ETF FXI, currently just sitting below its 50-day VWAP. We can see how much it's rocketed up ever since the Fed cut 50 basis points. Then they started kicking off their stimulus measures. It was back here on the 26th when billionaire David Tepper came on to CNBC, said he's buying everything in China and that he would welcome the opportunity to add more on a pullback. I suspect he may be doing that in the last couple of days, just as I've been doing myself as well with Tiger Brokers, buying the dip here. And again, just like Tesla, I would welcome the opportunity to buy even more shares for a lower price. Just moving on to global macro, we've still got signs of inflation around the world coming down. United Kingdom inflation falling sharply to 1.7%, below the Bank of England's target for the first time in over 3 years. So what's the opposite of stagflation, where you have stagnating economic growth and increasing inflation? We've still got economies and companies growing, while inflation coming down. That's a cyclical expansion. It's no wonder we got stock markets sitting at all-time highs around the world. And what could help out the picture even further is if oil keeps coming down, or at least stays under $75 a barrel for a while. What's going on in the Middle East doesn't seem to be upsetting the market too much, even though that is still a tail risk. And once again, Israel's apparently ready to strike Iran. We've been hearing this for 2 weeks now. Apparently they've decided on it, but it doesn't look like they're going to go after their oil assets. Just some military assets, potentially a watered down response. I think the US has threatened them with supplying arms, political support. If they go too big, as it's really not a good look right before the election. And there's a look at crude oil, just sitting below the 50-day VWAP. Just calling up a little bit here on low volume and volatility. We did see that big accumulation day thrust off the low there to start the month off. This too could be having a bit of a pullback and ready to pop up again. And just an interesting table of data here today from mining.com, the top 50 miners in the world. You're welcome to pause your video player to take a deeper look or visit the site mining.com. Really good for updates in the industry. And they've listed all the biggest mining stocks in the world, what country they're listed in, where their operations are, the market cap, and the quarter-over-quarter change. Australian miners BHP and Rio Tinto still leading the pack. Then after that, Copper Company coming out of Mexico and the States. Moving on, economic calendar. Didn't get much out today. Import prices, export prices, decreasing month over month. That's good for inflation as well. Looking out tomorrow, jobless claims and retail sales, 0.3 month over month, 1.6 year over year. And we'll be looking to see how that affects the retail sector, which, like I said, performed really well today, pushing up to the top of this resistance zone, which I think we can draw a bit of a resistant box in here. We'll see whether we get a push through that tomorrow. It's really been testing it all year pretty much. Other than that, we've still got the VIX sitting below 20 at 19.5. Another good push up today with Bitcoin on its way back to $70,000 a coin. Like I said, global liquidity's gone vertical. Potential pro-crypto government coming in. A lot of bullish seasonality. But for me, the clear standout today was uranium. On news, once again, mega cap tech making inroads into the sector to power their data centers. And for me, this is really exciting, as I believe we're only just getting started. That's all for the daily market review today. Thanks very much for tuning in, and I look forward to seeing you back here again this time tomorrow. Cheers.